Of just 105 US cents. Julia, in terms of equities, though, look, just trading water today?
Absolutely, just treading water, and the volumes really reflected how slow it was. Just $3.2 billion worth of stock being traded. We're in the middle of the week, and we always usually manage to break that $4 billion mark on a Wednesday. But really, those volumes just are reflective of the fact that most traders, investors in the market are just waiting for the FOMC. Probably more focus is the European Central Bank meeting. We've seen verbal intervention coming through from the likes of Mario Draghi, and now the market's waiting to see whether we are going to see actual actions going through. There seemed to be a lot of demand, though, once again for safe haven assets, and we did see Telstra reaching a 52-week high today, as high as $4.09 today. But it wasn't just Telstra. We saw the property space as well. A number of companies in that property space reaching 52-week highs. We saw Westfield Retail Trust, Dexus, the Colonial First State, Staple Securities, GPT. So a number of those property companies reaching 52-week highs as well. So today was really a day for those defensives, some of those companies with those high yields and those property stocks. It wasn't a day for the material space or the discretionary space. In fact, investors really just shying away from risk ahead of that FOMC meeting result tonight and then the ECB meeting tomorrow. And
Julia, I mean, what do you get in terms of a sense of the market for expectations? Look, are they being a little bit ratcheted down in terms of what they are expecting, particularly from the ECB?
I think that it's the ECB decision that's very much in focus. With the US, while there are expectations of quantitative easing, it's certainly not in this August meeting, and that's really because there aren't huge alarm bells ringing on the economic front in the US. So expectations of quantitative easing, but not in this particular meeting. So the market's going to be closely watching this European Central Bank meeting. We've seen verbal intervention coming through from Mario Draghi, saying that he'll do all it takes to help support the euro. And I guess the market's translated that into one of two actions. And really, both of these actions are just a band-aid solution until enough political will can be summed up for a longer-term solution. And that band-aid solution will either be bond buying, that's a revival of the market securities program, or securities market program, or we'll see some sort of unconventional program, and that's something like the long-term refinancing operations, LTRO, or something of that nature. So the market expecting to see one of those, and I think that's already been priced into the market. If we don't see at least that, we might see a sell-off in risk assets, and of course, if we see any more than that, that would be a positive for markets.
And we're going to continue the discussion on it later in the show. Belinda Allen from Colonial First State Global Asset Management will be a buyer. There were other obvious issues and developments today. Julia, you made mention of it a little bit before, as did David. China, the PMI coming out. Look, we've seen a multi-month low in regards to the reading, but the market didn't seem to get all that shook up by it.
I don't think there were any massive surprises there, and we saw a number of PMI reads coming out around the region, and it was quite interesting to see that we've seen a slowing down in all of these measures from the month of June. So in terms of China's, the official PMI is still above that 50 mark at 50.1. The consensus was for a reading of 50.5, so it did come in below that. We also saw the HSBC reading coming in at 49.3. So it was quite interesting to see that the official numbers actually weakened off from the month of June, while we still saw the HSBC numbers actually strengthening up. But I think if we have a look around the region at some of the other economies, it gives us a clearer picture of what's happening, and that is that the manufacturing space is slowing down around the region. In Japan, we got the market numbers, and they came in at 47.9. That's down from a reading of 49.9. So in contractionary territory. South Korea, we saw an extreme slowdown in terms of production and new orders, a reading of 47.2 there. That's down from 49.4. We also saw a reading from Taiwan, 47.5. That's down from 49.2. And Vietnam in particular was actually very weak, 43.6 from a reading of 46.6 in June. So although we saw the China numbers out, and the focus really was on China being the biggest economy in this region, the other regional numbers really showing a market slowdown in that manufacturing space. And of course, the big thing here is what's happening in Europe and the global outlook.